Good day, I'm Dave Robertson, and this is your Ottawa real estate market update for October 2017. Well, September was another solid month on the Ottawa Real Estate Board. The statistics here show us that the members sold a total of 1,387 homes on the Ottawa Real Estate Board, and that's about an increase of 1.6%, but significantly higher than the 5-year average of 1,250. If we look at what's happening in the marketplace, it's still more of a seller's market. We've had tons of transactions. Almost every month we've seen a growing volume of transactions taking place year over year, and on average per month about over 25% higher than the year before. If we look at the the average price of a residential unit will cost you just over $416,000, and a condo will cost you just over $261,000, and those are up about 8.2% and 3.9%. Respectively. So it shows that the Ottawa real estate market has been appreciating and is much stronger than it was even a year ago. And so that's very good. It also explained elsewhere in the article, and we've been seeing it happen regularly. Average days on market has dropped dramatically, that homes are selling faster. A year ago it was well over 90 days on average for a home to result in a successful sale, and it's probably close to half of that now. So homes are selling faster, there's fewer homes available, inventory is low, and it's definitely more of a seller's market. So in other news, I just want to flip over to a few other articles to share with you what's going on in the industry. The Ontario Real Estate Association published an article about a week ago talking about proposed changes to the real estate sales industry and the introduction of a new requirement when there's a multiple representation situation. And there was a discussion for a while, should multiple representation be banned, and that again is where one real estate brokerage represents the interests of both the buyer and the seller in a residential or condominium transaction. Should that be banned? And it's looking like a more thoughtful solution is coming forward, where it's okay for the same brokerage to represent both the buyer and the seller, but at least both parties need to be represented by a designated salesperson or a broker, so a different individual representing the buyer and a different individual representing the seller, not the same salesperson, which makes common sense. In an office like my own, where we have over 100 agents, it could happen more regularly where I'm representing a seller and another one of the 99 agents in my office bring in the buyer. Well, of course, we want to make a situation where that works, that both parties are still being represented by their own professional, but they are under the same brokerage. So this new, what are they calling it? Mandatory designated representation, I think is the term they're going with, would be a great solution to this multiple representation situation. So very positive changes to the industry in terms of representation for clients. And in other news as well, just on the industry, new mortgage lending requirements. Looks like there's some proposed changes coming in the works where buyers with a 20% or more loan value or a deposit value, so a loan to value of 80% or less, more of a traditional or conventional mortgage, they will now be subject to a stress test. So no longer do they have to just approve for the current interest rate, but they must approve for a slightly higher interest rate, higher than current market rates. And that's with the thinking that if rates were to increase in the future, that these buyers still have the financial capacity to carry that home under higher interest rates. We've already seen similar changes made in the last year when it came to high ratio mortgages, or when buyers have less than 20% down payment. We saw the new benchmark rate introduced, where they have to be approved not just at market rates but at the benchmark rate, and this is a very similar rule now for conventional mortgages. They must pass a stress test. So these are all efforts being made by the government of Canada to try to hedge against a possible housing bubble. And we've seen many warnings over the last year or two, specifically Toronto, Vancouver, Victoria, some of these cities who have had tremendous appreciation and prices just skyrocketing, and the concern that those prices are unsustainable. Here in Ottawa, we're a much more stable environment. The market prices don't tend to fluctuate as dramatically, and we've seen very steady prices for 5 years, 6 years now. And as represented just before, a couple tabs over, that modest appreciation. So 8.2 is some of the highest appreciation we've seen for several years, and I think that's a healthy appreciation level. So there's the short and skinny of what's happening in the Ottawa real estate environment. If you have any questions, or if you're contemplating a transaction in the next couple months, please give me a call. I'd love to sit down with you and have a free consultation and ensure that your next transaction goes as smoothly as possible. Thanks so much for watching. Let me know what you think about this kind of format of sitting down at the computer and sharing with you with some of the recent news. And I'd love to get your feedback on that. So until next time, I'm Dave Robertson, your real estate professional for life.